Everyone, hope everything is going well. There's a lot of things that are going on in the financial markets that I want to cover. And one of the individuals that I'm looking at is Finance a Lot. I really like this individual's channel. But before I get into what he talked about, look at 7 days ago. I said, no one believes a market crash is lurking. Now, I don't think, or I do believe we have at least one more decent rally in the market before everything just goes crazy. I did say that, hey, look, Trump may be indicted the 18th. Well, that looks like it's going to be in November after the election. We may still not know who the winner is, knowing how crazy things are. I think it's November 26th. So, that being said, that week where Trump was supposed to be indicted, the Federal Reserve is going to be cutting rates. Right now, 70% chance that you're going to see a 25 basis cut. There is a 30% chance there could be a 50-point basis cut based on the Fed's website or CME watch tool. Okay. Now, what I found very interesting is the 2-year yield is less than the 10-year yield. And I've showed you David Brady's research, and I've put that together in that video. No one believes a market crash is lurking. I said, hey, look, when the yield curve inverts, that's a red flag, red flag, red flag. Okay. And I don't want to even get into politics here, but we don't know what's going to happen with the presidency. We don't know the tax policy. There's a lot of uncertainty. And if there's a tax on unrealized gains, then what's going to happen? The rich are going to sell. They may decide to be like, yo, I'm going to dip this year. And then not only that, the tax question, uninverted yield curve, uninverted yield curve, that's a recipe for a disaster. Now, even though this is a recipe for disaster from a short-term trading perspective, I'm not telling you what to do. This Finance a Lot guy, I like his work, but he says that VIX divided by VIX suggests second volatility rally peak today. A large candlestick is similar to April 19th, along with fear indicator. VIX is at the top of the Bollinger Band when it just closed, putting downward pressure. Looks like vol is about to be crushed. So whenever the VIX is at the upper end of the Bollinger Band, tend to see a mean reversion movement in volatility, and I expect that to happen. And he's just showing a chart of the VVIX, the volatility of the volatility index. That's what it is, divided by VIX. And he's looking at ratios. And we're at the upper end of the bound, right? And yeah, look at it. It's up above the Bollinger Band. And he's using ratio. He's not just looking at the VIX index. So looking at that and look at it in his charts, he thinks that there will be a selling opportunity the week of, or let me rephrase this. There was a upper Bollinger Band in August. Okay, let me rephrase this. And then right now, it's at the lower end. Okay, and when you have excessive greed, you tend to see this ratio go higher, the VIX divided by the VIX. Gets lower when you start to see a lot of fear, where we're seeing fear right now. And he's just looking at what happened in August. You saw this go below the Bollinger Band. Bada bing, bada boom. You tend to see a bounce up. Okay. So we shall see how the markets will react. But if history serves correctly, the markets should rip, in my opinion, probably into the week of, the Fed cutting rates. I could be wrong, but that's how I'm looking at it right now. I was adding some bullish positions. I still have some puts on. I do expect the put position is going to be crushed, but I did buy a put in like UVXY. I bought a put in VXX. I bought the XSP, which is basically a mini S&P 500, but it's a CBOE option and it's cash delivery. So I do have a bullish positions, but I am prepared to add more put positions once we start to see this index rip. Okay. And another instance where you see this ratio, the ball, it goes below the Bollinger Band. Okay. Bada bing, bada boom. Saw this in August, saw this in also, what is it? April. So I expect once again markets to rip higher. But the bigger story is 2 year yield is less than the 10 year. And another thing I want to look at is this one. The yield curve is now officially uninverted after the longest period of inversion since 1929. Wow. Wow. Yeah, that's going to be it's going to be wild. I mean, the longer you pull, like say you're looking at a rubber band, right? You're pushing it way beyond where it's supposed to be. What happens when you push it way further than what you're supposed to do? So for a rubber band, it's going to snap. That same thing is going to happen, in my opinion, with the economy, commercial real estate. We're going to see issues maybe with tax issues next year. There's a lot of things beneath the surface. So it is what it is, even though from a trading perspective, I think the next week or two should be positive. From there, I'm going to have to reassess, but I still have some put option out there. SPX, I may add another one if the market rips, take some of the other long positions and go from there. But yeah, it's going to be interesting. Anyways, let me know your thoughts. Talk to you later. Bye.